Welcome back to the channel. On this episode of Weekly Review, I like to discuss about two different companies. You can call it stocks. Remember, behind every stock is a company. So I'm talking about two giants in the same industry. As I said earlier in my previous video, when you want to compare stocks within the same industry of the same capacity or equal market cap. And I'm talking about Microsoft and Apple. These two stocks have recently pulled down from their 52 weeks high due to the ongoing correction. However, this correction, it's across board. It's on Nasdaq, Dow Jones, and S&P are all in correction territory. So these two stocks have also been affected by the correction. So this might just be a time for you to evaluate if you need to have them to your portfolio if you don't have them before, or if you need to acquire them freshly. These two stocks are pulled down to a level of support, which we would see on technical chart. The exercise I want us to do, it's called total liability to free cash flow ratio. It's a quick exercise. It's a quick way to evaluate a company in the same sector. If you need to buy, you want to know whether which one of them is incurring too much or acquiring a lot of debt than necessary. These two stocks, they both have debt. Remember, debt is not a big issue. It's okay to have debt. Companies do borrow funds to execute different projects. However, we want to see which one of them is in position in case they are asked to pay for their debt, for their total liability with the amount of free cash flow in their bank account. We want to see how long it will take them. This is part of a metric when you want to select, we also check their market caps and the PE ratio. The two of them are paying dividend, I know, but we also need to check all those facts. Let's have a look at the chart. Let's see what the technical chart is saying. Let's see where they are on the chart, whether it's on support, or let's get information from the chart. For those of us that like price action, let's see what the price action is saying. Let's have a look. This is information for now. Let me collapse this side of it, and also I don't think we need this information here, so I can just go back on the code. Yeah. So we're looking at Microsoft chart. This is a beautiful chart. It's an uptrend. You can see it's an uptrend, but this is a weekly chart. On a weekly chart, we can see that Microsoft is about to sit on the 50-day moving average. It definitely gone below 20-day moving average, approaching the 50-day moving average. That is on a weekly chart. Let's go on a daily chart and see. On a daily chart, it's just about to reach 200-day moving average. So you can see that the 20-day moving average has crossed over 50-day moving average, going down. Yeah, for those who do the trading and all that, this is going down for itself. So Microsoft is approaching, or it's on its support at the moment. Let me just draw the support line here, because it's been here previously, and we can see that this is on its support presently on support at 296. This might just be a good buying position for those who want to add Microsoft to their position, or for those who intend to start afresh with Microsoft. But what you might need to know is, if Microsoft breaks this 200-day moving average, then it's going down to about 256. This is not funny, but that is what we're looking at. So we hope that when the market opens on Monday, Monday will be 23rd, is it 24th? One market open on 24. We hope that this support will hold, will remain. Otherwise, the next support line is around 256. So it won't be looking good for anyone that has Microsoft in their portfolio who already have some profit. I mean, some upside and has not taken any, have not trimmed down on your position. Guys, it's always nice. It's always good to trim down when you have a stock and it has run up so high, and even if it's a value investor or a day trader, trimming down, to reallocate funds to another stock isn't a bad thing. So let's have a look at some information here. We can see that the market cap here is stated as 222.59 billion. As I said, I usually don't use the figures on Momo, not because it's wrong, but I so much believe on the um, financial statement on Yahoo Finance. This is the floating information. It changes per minute and hour. But on Yahoo Finance, you have the statement for the year. For the year ending 2021, you will find the financial statement there. There's also information on here too, but I am very used and familiar more with Yahoo Finance. You can see a lot of information here. You can, can see all that. Let's go on Apple chart. Let's look at what Apple chart is saying. Okay, for your information, on Momo, you can request for a second level reading, which is higher than the normal reading. I mean, this is a second level information. You have funds flow in and out. You have a lot of information that you just might not need, except you are an institution, or you are investing or trading in a large volume and all that, which Momo can give you an access to. So we're looking at Apple chart on a daily. Let me just remove this. I think this has been there before. Okay. What we are looking at is that the previous high is actually 182,940. It looks like it's sitting on its support at the moment. Let me draw this support line. Yeah, it's sitting on the support at the moment, and support is around 162. You can see that Apple has run off recently, from 150 to 182. And also, let's have a look at the weekly chart. On a weekly chart, guys, it's always nice to have a look at daily chart and weekly chart, even months, just to see the bigger picture. When you're freaking out because of a correction, you should try to see that, whether it's actually a big deal. You would, by the time you look at the month or the weeks, you will understand better. You see a bigger picture. So what we're looking at is that on weekly charts, Microsoft is just about to sit on 20-day moving average. Um, and it appears to be a support around there. Let me show this support line here. Been there before. Okay. So yeah, uh, yeah, it's the dividend paying stock. You have a lot of information as well. But let's go on to the daily chart, and let's just measure the percentage it has dropped from the high. I think the previous high is 182. So let's say Apple, sorry, Apple. So it has dropped about 10%, 10%, currently 10%. This might be a good time to add more to your position, or if you're just new to buying Apple, but you can see it's on a support here. But if Apple breaks this support, then we are looking at about 147 or so. That would be on a 200-day moving average. I mean, I'm a value investor, and I would love Apple to go down so I can buy more. I can add more to my position. To be honest with you, I would prefer the price to go further down. a bit high, and I won't say expensive because expensive depends on your definition of expensive and the I mean the sector. This is a tech sector, and their P ratio is usually high, and the upside is actually better than most other sectors. So the P ratio um, for Apple is stated here as a 28. You know, um, there's a lot of information. Some you need, some you don't really need as a day trader or short-term investor. But what we can what we can also gather here. Let me okay. Let me delete this support line and let's have a look at. Okay, let's have a look. Um, let's let's see. Let's draw a trend here. Okay. Yeah, we can see that it's actually, if you really want to do it, you would see that it's gone from here, down here, down here, up here. Anyway, let's delete all this. So what we do now is we will go on Yahoo Finance to get to input all the data on the Excel sheet. Then we can do the exercise of total liability to free cash flow ratio. But you have information there, guys. On Momo, you can get pretty much all the information you want to use, even the financial statement and all that. I am just used to using my Yahoo Finance. You will see the information is coming out here, but you have the financial statement here. You have it quarterly, annually, so all information are available on this Momo. You can see it's dividend, stock split. You have all the information you need. Here, look at I'm using the details here. The previous close is 301, but the price here is 296. Market cap is 2.22 trillion. The P ratio 33.12. Um, Also, what we need from this Yahoo Finance for Microsoft is to go to the financials. From the financials, we'll get information there, then come on the Excel sheet here. The Excel sheet here, I already filled the information there, but I need you to see how I got the information that is on this page. You can see the P ratio for Apple here is 28.95. The market cap is 2.6 trillion. Apple recently has reached became the first American company to reach 3 trillion. That's about 3 weeks ago, but the price has fallen. Uh, Market cap depends on the stock price, and the stock outstanding. So, but for now, the price has come down to 162. So let's have a look at, for Microsoft, the P ratio is 33, a little bit higher than Apple, and the market price is 2.2 trillion, while the stock price is 296 as a close of business on Friday. So let's have a look. The financials, to see what you need to do to come to the balance sheet. In the meantime, you can see Microsoft 2018 110, 2019 125, 2020 143. You can see that Microsoft is growing. Their revenue is growing consistently. So here we will take the figure of total liability net interest. This is the figure for all their liability. The 191.0
791. This is the figure for all their debt, all their total liability, including everything. So let's go on the here. This is the same figure here that put here 191.791. Now let's look at the free cash flow. So the free cash flow, you come here, you click on that. For Apple, let's look at the market cap for Apple here, 2.6 trillion. We have seen that. The P ratio is 28.95, and the price at the close of business on Friday is 162. So let's also check the financials. I'm doing it simultaneously to save time and not to make this video too long. So yeah, on the Excel sheet, I have also put all the information here for the P ratio, the market cap, and stock price. So now let's look at the total liability for Apple. The information on that will come here on the balance sheet. Guys, you can also see for Apple 2018, 265, 260, the difference, okay, between 2018 and, okay, there must have been one or two things that make the figures go a little bit down, but we all know that Apple is a fast growing company. Okay, we can see that their total liability stated here is 287 billion 912 million. So we come on the Excel sheet and we put the figure here, the same figure here. So we need the free cash flow for both of them now. So for Microsoft, no, for Microsoft, the free cash flow, here is 60 billion 420 million. 60 billion 420 million. 60 billion 420 million. Now, let's go on that of Apple. For Apple, the free cash flow. Okay. Okay, good. For Apple, we have 92 billion 953. So I put those information here as well. 92 billion 952. Okay, yeah. So we have all the details here. What it means is that with cash flow currently with Apple as at end of 2021, if they intend to pay their debt, it would take them just 3 years to pay. For Microsoft, it would take Microsoft equally 3 years. But you can see that the total liability for Apple is larger than that of Microsoft. But you can also see that the free cash flow in Apple account is larger than that of Microsoft. But the ratio for both of them, it would take each of them 3 years to pay their total liability. But what you can also see that for Apple, the P ratio for Apple is 28, while P ratio for um, Microsoft is 33. Microsoft is higher than Apple. Both of them are in the same industry, the same technology. Now, you can see the stock price for Microsoft as 296. That of Apple is 162. Guys, for a value investor, this is an opportunity when the price is coming down for a value stock like Microsoft. You acquire more. I mean, it's in your long-term interest that you if the price come down, you can buy it as cheaply as possible. Even for Apple, the same thing. I would love Apple to be around 145, then I can acquire more. For Microsoft, I'll be happy if Microsoft goes back to around 250, then I can acquire more. I'm a long-time investor. For my own personal portfolio, I have both stocks. For our Elite Pro several funds, we have both stocks on, Elite 100, Elite Quarterly, and for our multi-asset. So, guys, this is a fast way to evaluate two companies within the same industry. You can see they're equally fit to compare together. I mean, the comparison between the two of them is, is equally balanced.
We have seen the technical chart, we have seen the balance sheet, the cash flow, we've analyzed the total liability to free cash flow, and you have seen that they are both good companies. They are both able to pay their debt in few years. They're excellent companies. Now it's your decision to know to say which of them you will add to your portfolio. Thank you for watching this video. Please like and share if this video has been any value to you, and please come again.